All right, traders, I am on track to my biggest green week of 2023. I ended up making over 5 figures today. I had 23 trades in total. 17 were wins, 6 were losses. Very quick in and out scalps with less than 5 minutes of holding time. We have so much to go over. Not only am I going to give you the money-making plan heading into tomorrow, because we are setting up for a very lucrative trading opportunity, and I'm going to be disclosing that trading plan in this video, but we're going to be recapping the strategies, the plans. Look at what we're able to do within Trader Society. Before the market had opened, I made it very, very clear. We have 2 gaps to fill below based off the patterns that I'm seeing. It's going to try to crack through the gaps initially. But then later on, once you see $396.39 is a support level, you're going to want to play the reversal for call options. And as you can see, if you were to buy calls towards this $396.39 level, you would have banked 3 times in a row on the SPY. We were literally bottom ticking the SPY. I ended up buying it twice, but there were 3 opportunities to buy it. And not only did I say that, but I said as a lotto trade, we have many red candles on the 30-minute chart. Once the first green 30-minute candle forms and closes green, you're going to want to scalp calls on the opening of the next 30-minute candle. Both of those trade ideas were to hit. The plan was to buy calls towards 396.39, and the plan was to also buy calls on the first green bullish 30-minute candlestick. So take a look. This is very simple stuff. Right here, the SPY gaps down. That means it opens up lower than it previously closes. All of the people who ended up swing trading calls, who ended up swing trading bullish, they became bag holders. Once the SPY gapped back up, that means it opens up higher than it previously closes, which are these white lines, and it fills this gap. This is the level that we played puts on yesterday, and we wrote it back down to fill the gap below. So where's the level to buy calls? Where are all the bag holders get created in terms of the bears? Where are the bears getting trapped? Where are the bears getting squeezed? Well, there's a lot of support towards this 396.30 level with big upside potential. Not only is there a lot of support, but there's the best trading strategy in the game. There's a gap to fill below at $396.38 at this key support. And if you look at what SPY's been doing, when it's been filling these gaps, it's been having reversals. This is where the calls became bag holders. When it fills the gap, it has a reversal. And guess what happens? The calls become bag holders again. This is where there was heavy support, and this is where the puts became bag holders. Guess what happens when it touches this support level? It has a reversal, and it explodes up to then fill the gap. We had a gap to fill above at 397.73. This is what the best trading strategy looks like, folks. Strong support. This is the bottom of the channel. There's a gap to fill below at 396.38. This is where the bears got squeezed. This is where the bears got crushed. So if SPY's going to gap down and open up lower than it previously closes and instantly hit the gap, you're going to want to buy calls, because what it's going to do is it's going to try to reverse at this gap, and then it's going to spike back up to fill this gap. And then when it tries to fill this gap, it's going to attempt to have a reversal. That was a no-brainer. And in terms of the no-brainer confirmation on what made that such an easy trade to enter was this right here. Looking at the pre-market, look at how much support there is at 396.30. During the pre-market, it reversed at the gap twice. Right here, it reversed at the gap, big upside potential. Right here at the open, it reverses at the gap, big upside potential. Your risk is literally down here. You're not risking much, guys. You're risking a tiny bit for a massive reward. That's the beauty of this gap trading strategy, and it serves a purpose. Don't you see what SPY is doing? It's reversing to fill the gaps. This is why this gap trading strategy is the best trading strategy in the game. SPY gaps up, and then it fills the gap. It reverses to fill the gap that's waiting to fill below. And then once the SPY gaps down and touches this support, so right here, the SPY gap down, let's take a look at the 5-minute chart so you can see this very, very clearly. Right here, there's a lot of support. The SPY gaps down, it touches the gap, it touches the support. That's where you buy calls and ride it back up to fill the gap above. Don't you see how simple it is to identify in the state of this market using gap trading strategies to determine where a bull and bear trap is going to be created if you wait for the swing traders to become bag holders, if you wait for a trend to develop. The trend has been when SPY gaps, it fills a gap and then it reverses. It's very simple. There was a gap to fill here. SPY gaps up. It fills the gap. It serves a purpose. Once it fills the gap, it reverses, and it comes crashing back down to fill the gap below. Well, SPY ended up gapping down today. It fills the gap. It touches this key support with big upside potential. It's already confirmed bullish because it bounced massively in the pre-market with big upside potential, and then it reverses right back up to fill the gap. It's no shock, it's not surprising, it's not luck, and it consistently works. This is absolutely brilliant, man. We are bottom ticking and top ticking the SPY almost every single day using this trading strategy. It is a very simple gap trading reversal strategy with channels. You tell me, if there's massive support right here with big upside potential, and the SPY gaps down, and then it fills this gap right here, touching the support, don't you think it's going to try to reverse and explode up to fill the gap? Because that's where the bear trap was created. And when it fills the gap, it reverses to fill the next gap. SPY gaps up. It fills the gap. It reverses to fill the next gap. SPY gaps down. It fills the gap. It reverses to fill the gap that's going to fill above. Aren't you catching on? Don't you see how simple this is? If you just wait for these gaps to develop, if you just wait for these swing traders to become bag holders, you can then identify huge potential heading into the market open. This is such a simple strategy. And the beauty of the trading strategy is you're buying low, you're selling high, you're getting the best entries, you're top ticking the SPY. When you're getting puts, you're getting at the top right before the peak, right before it reverses, and you're bottom ticking the SPY at the lows right before it reverses. And your risk is slightly below your entry, because if it cannot work at the best price, it's simply not going to work. This is what the best setup at the best price looks like. This is what nobody is teaching you. And you are lucky enough to stumble upon this hidden gem. And I'm going to continue to teach this trading strategy, because not only has it changed my life, but it's changed many members' lives within Trader Society. Like I said, we have a guy using these trading strategies within Trader Society. He started off trading penny stocks. He was successful in penny stocks. He was making $500, $2K a day. I got him to quit penny stocks. He went all in on SPY. Now he's making multi-five figures every single week, and he had his biggest 2 days making over 140K. The beauty of mastering the SPY is the scale is unlimited. It has unlimited liquidity. The volume only continues to rise as time goes on. SPY is only going to continue to get popular. If you catch this trend now, the best time to start was a while ago. But the best time to start is literally right now if you haven't started, is to put all your time and dedication into this one simple gap trading strategy with the SPY. That's all it is that I'm doing. I'm not even looking at stocks anymore. Last week when I was on vacation in Colombia, I was looking at stocks. I got off track and I wasn't trading SPY as well because I was focused on putting my energy into other things. Now I'm back on track, and this has been literally one of my best trading weeks of 2023, and it's on track to be my best week of 2023 to date. So with that being said, that's the trading strategy. That's very, very simple. I'm going to walk you through the trading plan towards the end of this video. For those of you who stay to the end, you get rewarded with the best information. But in terms of price action, in terms of how you could have, had a lot of confidence to buy calls, besides, the trends have been when it fills the gap, it reverses to fill the next gap. So SPY gaps up, it fills this gap, and then it reverses to fill the gap below. SPY gaps down, and then it fills this gap to reverse to fill the gap above, right? So besides that, it's just simply understanding. We have heavy support. Look at this, man. This is an overreaction to the downside. And you have heavy support, and this heavy support right here is aligned with this gap that has not been filled. It fills it in the pre-market, and it has a massive spike. That means it's already confirming bullish, and the SPY is gapping down. So if the SPY gaps down and then you see it touch close to this support, close to this gap, you're going to want to buy call options. And then in terms of the lotto idea was brilliant. The lotto idea was right here. We have many red candles on the 30-minute chart. Once the first green 30-minute candle forms and it closes green, scalp call options on the opening of the next 30-minute candle. Why did I say that? So as you can see right here, this is the first green 30-minute candle. These are the many red 30-minute candles that I was talking about. The reason why I said that was, look at the trend. Whenever SPY has been selling off massively, as of recently, when it forms that first green 30-minute bullish candlestick on the dip, it tends to spike. Look at this. SPY has a big sell-off, right? It forms the first green bullish 30-minute candlestick, and then what happens after that? It starts to go up. So if you wait for it to close 30-minute on the bullish, and then you buy the opening of the next 30-minute candlestick, or you buy under the previous closing 30-minute candle a little bit on the dips, you start banking on calls. That has happened. That lotto idea has happened so many times within the past week. Here's another one. Let me show you in terms of what it is I'm talking about. So I showed you one example. Here's another one. SPY is dipping. It forms the first green bullish 30-minute candlestick, and then it skyrockets on the next one. Do you see that? SPY is literally dipping. It forms the first green bullish 30-minute candlestick towards the gap, and then it skyrockets. It works so many times this week. That's why I ended up saying that, and it was at the gap, which is why I ended up scalping calls, right? So you don't have to wait for the gap to actually fill. If you're seeing bullish confirmations almost at the gap, and the gap already filled in the pre-market, that doesn't count as a gap fill, but pre-market information doesn't matter. If you see there's heavy support right here in the pre-market and there's a gap to fill, you don't have to nickel and dime it, man. Look at the upside potential. You can take a starter position. If you see bullish confirmations on the 5-minute, 1-minute, 30-minute chart, you don't have to get in exactly at the gap, but the wider you are from the gap, the more risk you are exposed to the gap filling. So you want to get in close, but you don't want to nickel and dime it, right? So the gap filled in the pre-market, it didn't fill during normal trading hours, but look at your upside potential. Your upside potential was there, and it made sense because there was a gap to fill above. And that opportunity printed one time, 2 times. I played it on the second time here. So when the first green minute candlestick formed bullish, I played calls on this, and then I banked on this spike, got it in and out quickly. And then I bought calls right here as it retested the dip. And then I bought calls again into the close, right here into the close. When it retested right here towards 396.60s. We were buying calls. It spiked all the way to 397.30s before crashing. We get in, we get out very, very quickly. This key level at this gap, we were prepared a day in advance to buy this, and it quintuple bottomed. It bottomed in extended hours. You could have bought shares. It bottomed at market open. It bottomed again right here, and it bottomed again right here. There was so much opportunity. So those are some of the basics in terms of what I did today. Those were like 3 great trading opportunities. But like I said, I made 23 trades today. There's so much more to this, man. I'm not going to have enough time to recap it all. But there's just so much opportunity within this market, and it's truly unbelievable what you can do. This was a bearish M pattern that someone pointed in the chat, and we had people taking advantage of puts when this actually formed. I was call focused on the day, and calls were printing for the vast majority of the day, and not all of them were wins, but the vast majority were wins. But this was a bearish M pattern where SPY skyrockets, and then it dips and it's forming an M, and you see how it starts to form an M towards the top, towards the double top. And then you could just see right here, it's forming the same bearish pattern that it did in the pre-market. You have this green bullish candlestick. You have this red candlestick. Once the red candlestick forms, right? So you have this green bullish candlestick towards the double top forming the M. Once the red bearish trend reversal candlestick forms, what happens? SPY starts to get crushed. SPY starts to get crushed, right? And then we had a great call opportunity that was pointed out towards here that I took advantage of. So those were the main plays. Those were the main things that I wanted to bring awareness to in terms of the very simple, gap trading channel strategy that we are using. Now, let's focus on heading into tomorrow. And by the way, guys, if you do want to be a part of Trader Society, like I said, the price is going up. This is going to be the second time we've raised the price within the past year. It's going up end of March. We're going to be raising the price. We don't do discounts. We don't do coupon codes. We only raise the price as time goes on. So with that being said, we are going to be raising the price end of March. The best time to get started is right now. You get access to the chat room. You get access to Discord. You get access to the moderators. You get access to people who are making multi-5 figures a week. You get access to the mentors within there. You get access to the chat room, the Discord server, the networking opportunities. You also get access to the Discord server, like I said, the live trading streams. We now have moderators who are going to be doing live trading streams, and you're also getting access to the video lesson library. There's over 100 hours of content with video lessons and live trading streams teaching you the entire gap trading system, how to master it, risk management, position sizing, psychology, and everything I know about price action and technical trading and the gap trading strategies, because that's what I am. I'm a price action trader. I scalp with the trend, and I know how to set the trend. I know how to identify reversals, and I use unique gap trading strategies that nobody else is teaching. This is all self-taught, and it's self-taught through me analyzing the charts. I have this third eye, and I understand how to analyze and master charts. It took a very, very long time to figure out, but it's fairly simple if you have the right mentor. For me, I didn't have a mentor, so this took literally forever to figure out, and I'm going to continue to master it every single day. And like I said, the beauty of this trading strategy is you set the trend, you get in at the best entry possible, your top ticking SPY, buying puts at the low, shorting at the top, and your bottom, taking SPY, buying calls at the lows, buying at the lows, right? That's the beauty of this trading strategy. And as you can see with this trading strategy, since we are getting the best entries possible, there is very little risk involved. If it does not work, we get stopped out very quickly. So like a 50 cent, 75 cent move against us on the SPY, we get stopped out. And it has very big upside. And I scalp with the trend in and out, right? So if I'm bullish, instead of buying and holding, I buy, I sell into the rip. When it dips back to previous resistance and the trend looks bullish, then I scalp calls at previous resistance on the dip. Rinse and repeat. Once it stops working, then I cut my loss, just take a break and wait for the next great setup to come. So if you want to be a part of this, all the information is explained down below. It is the first link in the description. The first link in the description. If you want to join right now, you get lifetime access, and it's a one-time fee. There's so much more to this, man, and the community that we are building is truly special because, like I said, we're dedicated to not only trading and mastering the SPY, which is the best thing to optimize for because of the liquidity, the wealth opportunities the SPY has to offer. This is what all the wealthy traders are trading. And the way it moves and the price action, I find it to be extremely highly predictable if you know what it is that you're doing. Not only that, but the gap trading strategies. We know our niche. Our niche is SPY, and it's the gap trading strategies. We stick to those two simple things, tune out all the noise, and we do very, very well if you stick with the system, right? So as long as you're disciplined enough to stick with what it is that I teach, you should do very, very well in the long term. So with that being said, if you want to join, is the first link down below in the description. I'm telling you, man, this is the best time to create that skill set. And you could start risk-free. You can do Webull paper trading risk-free, get adjusted and experiment with the trading strategy, get some results paper trading. And then once you're getting results paper trading, you could switch to a live account with TD Ameritrade by Thinkorswim. That's the name of the game, man. So with that being said, if you want to take advantage of that opportunity, it's a one-time fee, it's lifetime access, and you could join right now and trade with us heading into tomorrow. Now, in terms of my trading plan for the SPY, and what you guys need to understand about my trading plans, they can slightly alter and slightly change heading into what the pre-market looks like. For those of you who are wondering, the pre-market is extremely important. Look at how extremely important the pre-market was today. The pre-market literally told you that it was already having a gap close reversal. It already ripped right off the gap. So if it instantly drops right back down, you should be confident. Like, guys, you need to learn when to be confident. Like, seriously, you should be extremely confident. If SPY spikes off the gap in the pre-market, so it spiked off the gap. Here, let me show you real quick. You guys, one thing you guys need to learn is when to double down and be extremely confident. So, like, if you see the SPY at key support with big upside potential and there's a gap to fill below, and it fills that gap and it has a massive spike and then it just instantly crashes right back to support, would you want to short the SPY and buy puts here? Would you be confident in that? I wouldn't be. I'd be fucking terrified because that's where the puts got trapped. That's where the puts got squeezed on the gap up, and puts also got squeezed during normal trading hours multiple times throughout this week there. I'd be absolutely terrified. I'd be terrified of the big upside potential. I'd much rather just buy calls at the lows and ride it up. And another reason why I'd be terrified is there's a gap to fill above. That's why I would have been terrified of puts, is because there's a gap to fill above, guys. When a stock fills a gap that's waiting to fill below, right here, there's a gap to fill below, and it already ripped massively in the pre-market. If it's going to gap down and instantly start to fill that gap, you buy calls and you play for the gap to fill above. That's where the bear trap's going to get created. Don't you see? Very, very simple. It's doing the same exact thing. This is so simple. There's a gap to fill above right here. SPY's at the key support level. Key support level. It gaps up. It fills the gap. Boom. It worked. Swing traders banked. Well, now the day traders are banking. SPY gap down, it fills the gap right here, and it rips up to fill the gap above. You need to learn when to be extremely confident. Like, look at this, man. It's the best trading strategy. What is your risk? Your risk is like right here. If it cracks the white line, you risk a little bit below. Look at your upside potential, right? Put yourself in situations where there's big upside potential and the odds are in your favor because it's going to try to reverse at the gap to fill this gap. That is why. It's very, very simple. Now, look, here's my plan ahead into tomorrow, and this is why, for those of you who stay to the end, truly get rewarded with the best information, this is going to be short, simple, and quick. Short, simple, and quick. And like I said, man, the pre-market updates are golden, man. Like, for those of you within Trader Society, the pre-market updates, the trade ideas, like all of this stuff, man, like if you're not in, you guys are truly missing out on some of the best information. I can only give away so much within a day in advance in a short video, but and we're literally trading all day. I trade in the scored almost every single hour of the day. I'm trading like every single hour now with these 30-minute candle strategies along with the gap trading strategies. But look, man, for those of you who stayed to the end of this video, this is what I can give you, and what I'm seeing is absolute gold. So what I'm visually seeing, and this is based off of how the daily chart looks and how the daily chart is setting up, I am seeing personally an opportunity to buy the dip into buy call options. That is what I'm seeing. So I want to bring awareness to this pattern so you know what it is that I'm looking at. So right here, what I want you to focus on is this. See how the SPY kind of forms like this middle, it forms this like middle candlestick right here. So what is it that I'm talking about? Right here, we're going to compare the left to what's currently happening. This is very, very simple, right? So I'm identifying patterns that look alike. See how it forms like this middle candlestick right here? See how it forms kind of that same type of candlestick? It's like a middle candlestick right here, right? And then what happens the next day? The next day it sells off with a bearish wick, right? Just like it did today. It sells off with a bearish wick. So it looks nearly identical. The only difference is this candle was red and this one was green, but it looks nearly identical. What happens the next day? The next day, on the third day, which is where we would be tomorrow if this pattern works, it bottoms at the previous closing price and it has a massive green day. And this is not the first time that this has happened. I'm going to bring awareness to similar patterns. I want you to focus on how SPY reacts because we are at support. This is considered support on the SPY. I want you to bring awareness to how SPY reacts when it forms this red bearish looking candlestick, keyword, at support. So right here, it forms this red bearish candlestick at support. It gaps down, but it recovers and it starts to fill the gap. So it gapped down, but it recovered and the bulls ended up winning on the day. Right here, it forms this red bearish candlestick at support. It ends up going a little bit under the previous closing price, but then it recovers and goes green and bullish. Right here, it ends up forming that same bearish candlestick at support. And then it recovers the next day and goes super green, right? So do you understand why in hindsight, I'm bullish, right? But we have to see how it reacts and we have to see how the pre-market looks. But in hindsight, I'm super bullish. I'm super bullish on this buy in hindsight. Doesn't mean I'm going to buy it, but I am going to be focused in preparation on opportunities to buy calls on dips. I don't like buying breakouts. I don't like buying rips. So this is what I can give you in terms of right now, right? We don't know if it's going to gap down or gap up. So this is what I can tell you as of now. And there's going to be a much better update heading into the market open. So if it gaps down, it's going to be likely something like today, where it bottoms early and then it fills the gap that's waiting to fill above. So if SPY gaps down, it should be an opportunity to buy calls, to ride it back up, to fill the gap at 396.26 to sell for profits into the spikes, right? So the question would be, well, if it gaps down and we're interested in buying calls, what's the level to buy calls since there's no gap that's really waiting to fill below anytime soon? The answer to that question would be two things. Pre-market lows, wherever the pre-market lows are tomorrow, and also right here, towards heavy support. Where's your heavy support? Towards 394 to 393.60. That's where you're going to want to be focused on buying calls if it gaps down tomorrow. Now, if the SPY gaps up tomorrow, what we're going to look for is the previous closing price, 396.26, to react as a support level. And then we ride it back up to 397s, right? So that's a very quick in and out scalp idea. We look for like 1 point in our favor with a max risk of like 30, 40 cents, right? It's like a 2 to 3 risk to return ratio in between that, right? So that's the game plan. Very, very simple stuff. And that's my main focus heading into tomorrow. And this is what I think a day in advance. My views can change at market open. If I'm not seeing any clear patterns and if I'm not liking the price action, then there's not going to be a trade. But that's what you need to understand. And that's my bullish thesis. Now, in terms of the bears, it's going to be tough, man. It's going to be extremely tough to be a bear. It truly is, in my opinion, heading into tomorrow. It's going to be extremely tough to be a bear. I'm really not too interested in being a bear at the moment at these low oversold levels. I'm going to be targeting, if we gap down, like I said, 394, 393.50 for calls. I'm going to be targeting these dips, ride it back up to fill the gap up. If we gap up, then I'm going to be targeting this 396.26. If it reacts to support, then I buy calls there. I'm using tight 50 cent, 70 cent stop losses against me. Now, in terms of being a bear, I truly don't have any interest or much of even an analysis to be a bear. What I can tell you is just avoid puts. If anything, just don't do anything but avoid puts and focus on the call opportunities on the dips if you're going to trade tomorrow. But in terms of bearish, they would need to stay under 396.26. If they turn 396.26 into resistance, then it's going to sell off to 394 to 393.50. I think 393.50 is going to be a long shot. It likely bottoms at 394. I'm really have no interest in being a bear at these levels, right? So that's the game plan heading to tomorrow. It's going to be very simple. And I'm telling you guys, based off of this pattern trend I'm seeing, tomorrow should be an extremely big green day, and I'm extremely confident in this. The pre-market and market open is going to help tell all, but in advance, that's what I'm seeing. I hope you guys enjoyed this. I hope you're learning a lot. I hope you were banking off of these, price action analysis videos that I'm giving. I literally told you guys in yesterday's video the exact low for calls. It was the best price, and there was 3 opportunities to buy calls. But you must have your platform set up, which is something that we teach within Trader Society, to scalp. You must have hotkeys set up. You must have your order pre-filled out. You must have market orders set up. With SPY, you can use market orders. That's fine because of the liquidity and the thin spreads, but obviously not during news or FOMC meetings. The spreads get wide and it's too volatile. But you must be prepared, man, and you must just get in. Like, you shouldn't be fearful of not getting in. It's just a quick 1-minute candle, and if it's already confirmed in the pre-market or previous support, then just get in. Don't be fearful of buying at the best levels. You should be fearful of doing the inverse at the best levels, right? It's just a common sense type of game. Where the bag holder is getting created, where the swing traders bag holder is getting created. Where's the next bull trap? Where's the next bear trap? Oh, SPY has a gap to fill below right here. There's heavy support with big upside potential. It's already ripping off that support in the pre-market. If it gaps down, has a big crash back to the pre-market lows, you're going to want to scalp calls, ride it back up to fill the gap above, because SPY is going to try to fill the gap above. It's a very simple game, man. But what's not simple for a lot of people is to wait, to be patient, and to wait for these trades come to you, to wait for the bag holders to get created, to not make gamble swing trades, flipping a coin, whether it's going to gap up or gap down, but just wait to capitalize off of those gap ups and gap downs for trend reversals, right? Very, very simple stuff, man. You tell me. Let's take a look at the chart one last time. This is massive support with big upside potential. Low 396 range, right? SPY gaps down. All the bulls became bag holders if they swing traded. So what does SPY do? Well, right here, we're back at this support. All the bears who swing traded got greedy, didn't sell the dip, right? Didn't sell the dip, who were holding hopes, didn't take their profits, right? Didn't understand, it could rip back up to fill the gap, right? Bears became bag holders. They got squeezed. And then once this gap filled, what did SPY do? It had a reversal. It had a double top. It had kind of like an M pattern in a sense, right? And then it came crashing back down to fill the gap below. Well, once the SPY gapped down, and then it came crashing back down at market open to fill this gap below at support, it had a reversal at the gap, and then it started to fill the gap above. It makes sense, man. There's a gap to fill above, there's support. There's a gap to fill above, there's support. When it hits the support level, when it hits the gap, it's going to try to reverse and fill the gap, because this is where the puts, the bears, got squeezed and became bag holders. In terms of puts, we're buying puts here at the tip top. We're not buying puts down here. This is where we were call focus. And there was 3 opportunities to scalp in and out. Market open, second time right here, third time right here. In and out scalps, make bank. I took advantage of 2 of them. So my question to you is, did you take advantage of these opportunities? There is no excuse for you to be red. You must just trade the best setups at the best prices. I made 23 trades today. Only 2 to 3 of those were the best setups at the best prices. The other were lotto trades, and I did very, very well as a whole on those lotto trades. But in terms of the vast majority of the people watching these videos, you just need to focus on trading the best setups at the best prices, the gap levels, where the bag holders are getting created, where the bull and bear traps are getting created. Just trade those. When you scale your account to 6 figures and you're making a living trading, then if you want to, you can practice with smaller size on other trading strategies, guys. I've earned it. I've earned the ability to make lotto trades and to get in and out because I understand how price action works. But for all of you who are starting with small accounts, or for all of you who have not made it to 6 figures, you haven't earned that right yet. It's going to take time. You are not going to make a lot of money trading options in the beginning. The way it works is you compound your account, and what you're focusing on is trading the best setups at those prices. And you're focused on instilling good habits to just do what's best for your portfolio. And you're focused on percentage gains and compounding your account. You are not going to make a lot of money if you are trading in a disciplined approach and you are sticking to proper position sizing with proper trading contracts. So in terms of contracts, if you have a small account, You can do 0-date expirations, but you have to get in and out very, very quickly. Once you have a large account, you don't even have to try 0 dates. You can do 5 to 7-day expirations, and you'll be completely fine with those, and you take much bigger position sizes with those. But with a small account, you can't be taking big position sizes. You need to use a cash account, and you need to be trading expirations that are closer. 3-day expiration is a great balance. Some people like 0 dates, some people like 2 days, but that's what you need to be focusing on. Once your account scales, you don't have to mess around with smaller expirations. You can go with further expirations a week out, play it safer, less volatility, less rewarding, but much bigger position sizes to make up for that. And it's like trading a stock as an option in a sense, right? So you got to start somewhere. And what I'm telling you is focus on at the money strikes or barely out of the money strikes. So if I'm buying calls at 396.40, I'm going to go with a 397 strike. If SPY's under 396 and it's at like 395.70, 395.60, I'm going to go with a 396 strike out of the money in that sense, right? So it depends on where the stock price is, but stay out of the money. And if you go out of the money, go barely out of the money. Go 50 cents out of the money at max. If the stock price is not at that 50-cent mark, then you got to wait, or you just got to go at the money or in the money in that sense, right? And just get in, get out. One thing that has improved my trading drastically as of lately, I've been taking more trades, and this has actually encouraged me to take more trades in a sense, not only because I've really learned how to master this by and gain a lot of experience with it throughout the past year, but the most successful trader within Trader Society, he started off trading penny stocks. He's making $500, $2,000. He listened to what I said, and he compounded his account. But one thing that he did differently that I wasn't doing is he stopped doing 0-date expirations, and he started sizing in 20 to 30% of his entire account. Now, this is not for small accounts, but he started sizing in like 20, 30% of his account into further expirations. Now, if you have further expirations with a cash account on a small account, you can do 20% of your account depending on how big it is and make 5 trades. You're going to be limited to 5 trades with that cash though. But what he started doing was he started holding less, and he started scalping for just 1 to 2 minutes, in and out within 1 to 2 minutes. So if you make a 1 to 2 minute trade on SPY at the right entry with the right strategy, that's about a 20 to 50 cent move in your favor. So the stock goes 20 to 50 cents in your favor, and the options can go up like 2 to 5% very, very quickly on a 7-day expiration. He started doing that where he gets in and out, whether he's right or wrong. So he's basically bottom ticking or top ticking it when he's right. He doesn't really add in a sense. He just gets in and out within 1 to 2 minutes. And he's doing a 7-day expiration, very little risk. If he's wrong, he cuts it at like 1 and 2%. If he's right, it's like 2 to 5 to 7%, right? He gets in and out very, very quickly. He goes with a safe expiration, but he sizes in big. He does 20 to 30% of his entire account, not his net worth, his account, and then he cashes out some profits. He still compounds, but he cashes out profits every single Friday. He gave me that information, and me personally, I've made that shift within the past month. And it does make a lot of sense, because I'm telling you, when your account gets to like the 6-figure range, you start wanting to like protect your capital, and you start wanting to take advantage of things that you couldn't really do as a small account. You can as a small account, it's just not going to be as ideal. It's going to take you much longer to grow as well. But you start playing it safe, and you start protecting your capital, and you really start to see that it just adds up. These small little wins really tend to add up, especially if you're making, he's typically making like 5-6 trades a day. Lately, I've been making like 10 trades a day, 15 trades a day. But it starts to add up very, very quickly. I'm telling you, man, like if you're putting 6 figures in a 7-day expiration and you're making 5% on that, that's a $5,000 profit in 2 minutes. And you can do that several times a day. It is truly incredible what you can do. With 0 dates, you're going to be limited in a sense what you can do, because there's going to be some sort of, limited liquidity. But it's not just that. The disadvantage to 0 dates is, yes, they are very lucrative and they're very rewarding percentage wise, but one small move against you, and that could turn into a big percentage loss. That's why you have to size in a lot less on a 0 date. Just because you're losing a lot percentage wise doesn't mean you're losing a lot of your account if you're sizing small, right? But I've actually found it to be a lot simpler to just go at a further expiration and just get in, get out within 1 to 2 minutes. A quick scalp, 20 cent, 40 cent move in my favor, make my quick 2 to 5%, and just wait for the next best one, man. And it doesn't feel scary. Like I'm taking a bigger position size of 20 to 30%, much bigger than I would do at a 0 date. With 0 dates, I wouldn't do more than 10%. I would keep it under 10%, and I would tell people ideally 5% max, but it all depends on what you're starting with as well. If you're starting with less, then you're obviously going to be exposed to a lot more risk than someone with starting more. That's the disadvantage of starting with less in terms of risk management. You're going to be exposed to more risk automatically, and it's going to be tougher for you to make it, but it's still possible. But that's the biggest advantage with having a large account is you're exposed to a much greater risk management system. It's a lot easier to make money. It doesn't necessarily mean it's a lot easier to grow your account, but it's a lot easier to make money in a sense. But you can put yourself in much safer positions. But those are some tips. Those are some tricks that I would recommend. And like I said, I started off with 0 dates. I still do them to this date. I'm just finding it in a sense not the most attractive thing to be doing with the point that I'm at in terms of trading right now, but I still do them in a sense. And in terms of 0 dates, for those, if you're going to do them, I would definitely just the best setups, the best prices, just the best setups at the best prices. You have strong confirmation, you're confident in the trade, you have experience, then you can go to 0 date. You can also do multiple trades. You can do a 0 date and a further expiration. You can hold the further expiration a little bit longer. But me personally, I don't like holding. I just like getting in and getting out and then taking advantage of the trend. So if the trend's bullish, I buy the dip, I sell into the rip, and then when it drops back to the previous resistance level that I sold out on the rip, then I rebuy the dip. And you can keep on doing that until you don't want to milk it anymore because it's towards resistance, or until you just have one small loss and call it for the day. So with that being said, man, I'm going to leave it at this. If you want to join Traders Society, this is the best time to join. We're going to be raising the price end of March. If you want to join, now's the time to get in. You get lifetime access. It's a one-time fee, and you're going to be getting access to the Discord server, to the moderators, to the mentors within the Discord. We have a great group. We have a great community, and I want you to understand what this team is about. It's about creating self-sufficient traders. We are putting all of our time, all of our energy, 100 units of energy. We're deploying all of those 100 units of energy into mastering one simple gap trading strategy, gap close reversals, gap fill strategies. Very simple trading strategy. The beauty of the trading strategy is you're buying calls at the low, getting the best price possible with a tight stop, and then you're buying puts at the lows at the top right before the stock crashes for very lucrative trading returns. And I'm going to show you how to scalp and trade the trend so you don't have to hold and hope with the trend, because it can reverse and you can get back all your profits, right? Me personally, I like getting in and out with the trend and following the trend, right? And we set the trend. I'm going to show you how to set the trend, how to get in right before the trend reverses at the best price. It's the best trading strategy possible. There is not one person, I would challenge anybody, to make a video showing me a better trading strategy. Me personally, I have not looked at what other traders have had to offer. Now, in terms of other traders, I have seen and I have gained and shown interest in other traders within Trader Society, because it is my community and we are focused on mastering the SPY and mastering the gap trading strategies. They're in there for a reason. But in terms of other traders, I don't know what it is that they're really doing, and I really don't focus on indicators, but I would challenge anybody to name a better technical price action trading strategy than this. The reason why I say it's the best, because I analyze the charts every single day when the market's open, 7 hours plus a day. And then I also do it when the market's closed. And I'm trading the chart, and I'm noticing every single time the strategy almost works. It has an 80% win rate, and I'm noticing we're getting in the best price possible. We're setting the trend, we're buying the lows, and then we're shorting the highs right before the reversals. We're trend setters, and I'm seeing this is the best trading strategy possible. It's simple. I don't see any other way on how it'd be possible to do this. It is very, very simple. That's why I tell people to challenge me. Challenge me. See if there's something better out there. I don't think there is anything better out there in terms of this trading strategy. So look, man, if you want to master this, if you want to make 2023 your best month, if you want to make the beginning of March your best month, if you want to make this your best quarter and finish strong, I just closed out February very, very strong in the green. This is the best time to join. It's a one-time fee. It's lifetime access. All the information is explained. It's the link down below in the description. And like I said, you get access to the video lesson library, the gap trading system, which teaches you the price action technical strategies, how to master it. It shows you my entire documentary as a trader. Even back when I was trading small caps, I used the same strategy. It worked on small caps, and then I adjusted to SPY because SPY is a lot better to trade. There's a lot more liquidity, and it's a lot more lucrative. You're limited to what you can do with small caps. The richest people trading small caps are typically manipulating the stock and running some sort of Ponzi scheme, right? So with that being said, man, this is 100% legit. It's a phenomenal trading strategy. I haven't seen anything better than this. And the reason why I say that is I trade the chart, and in terms of what the chart says, there's just nothing better. I'm just waiting for someone to say, okay, well, look at the chart. this is a better trading strategy. I haven't seen it. The chart has not shown me a better trading strategy. I trade the chart with my third eye. The chart has not shown me a better trading strategy. So with that being said, if you want to master the gap trading system, if you want to master risk management, position sizing, if you want to master the mindset, the psychology to trading, the discipline, if you want to surround yourself with a team who is dedicated to mastering the SPY and mastering the gap trading strategy every single week, then this is the team for you. It's the first link down below in the description. You get access to the Discord, the live trading streams. We are in the chat all the time answering questions and giving our trades in real time for ideas, not for you to blindly follow. We are looking for self-sufficient traders. We are looking for traders who want to master this, who want to become self-sufficient. In terms of what's rising up, it's individualism. It's people who are dedicating their time to mastering this simple strategy, right? Not blindly following. We're not looking for traders to blindly follow. I am not giving you the pitch that you're going to join this program, follow people's alerts, and make money. I have no interest in those type of people. You can join another program if that's you. We're looking for people who want to actually master this and dedicate their time to mastering this, and who want to seek help when they are trying their best and they need a question answered and they want to seek help and ask that question. Then we're going to be there for you. But you have to actually try and put the work in. I dedicated my entire life to this. There is nobody in the background. There is nobody behind the scenes. It's me, and it's this team that I created within Trader Society who is helping along the way. And if you want to master this, I'm going to give you the opportunity to master it with us together as a team. It's going to be the first link down below in the description. I will see you guys tomorrow live at Market Open.